Hi everyone, it's Rob here. This is my first virtual investment portfolio video blog post, and so I'm going to start off with a little bit of background information just in terms of why I decided to make this blog. And there's really two reasons. First and foremost, I just want to be able to have documentation of what my thoughts are, and I'll be able to look at those in the future, and hopefully just being able to see what I was thinking in the past. That should help me develop my investment strategy and improve it going forward. In addition to that, I'm also considering starting an investment advisory firm or investment management company maybe 10-15 years down the road, and I feel like having this kind of a blog might help provide insight into my investment strategy prior to actually opening the firm. And so those are kind of the two primary reasons that I decided to do this blog. And so with that being said, I'd also like to point out that I'm not a licensed investment advisor, at least not yet. So anything I say is not to be viewed as investment advice. And so I'm not endorsing any of the securities that I talk about, and I'm also not responsible for any gains or losses that you incur as a result of watching my blog. So with that being said, I think we'll go ahead and get started. So I'm going to be managing a virtual $100,000 investment portfolio with roughly 5 companies or so in there on average. I can't go much more than that because I'm not doing this full time. I'm still a student. But anyway, for my first virtual investment, it's going to be Copa Airlines. Their ticker is CPA, and there's a number of reasons that I like them. So I consider myself to be a value investor, and I think Copa Airlines is extremely undervalued at the moment. But before I get too in depth into that, let me just give you a little bit of an overview of their business. So they are a regional airline centered in Panama, and they use what's called a hub and spoke model. So Panama is their hub at the Tocumen International Airport, and then they have spokes branching off to a number of different destinations in North and South America. And so that's kind of their business model. They're looking to connect people where there's not enough demand for non-stop direct flights. And so what they're doing is they're taking people from these smaller destinations, and they shuttle them up to Panama. They'll have a short layover, and then they'll get on to their next connecting flight, and then fly to their final destination. And that's basically their business model. And Copa Airlines also happens to be one of the lowest cost airlines in all of North and South America combined, and there's a number of reasons why they can do this. First of all, because every flight more or less comes in or out of the Tocumen International Airport, they can really capitalize on economies of scale. So basically they don't need to have a bunch of different flight crews spread out at a bunch of different airports around a bunch of different countries. They can do a lot of the routine maintenance all at one airport, and it's just a lot more efficient that way. And another way they can take advantage of economies of scale is by only utilizing a limited number of aircrafts, or limited types of aircrafts. So they only have 2 types of aircraft they use, the Boeing 737 and the Embraer 190. So maintenance for them is very routine. Some airlines have 5-10 different types of planes that they utilize, and obviously it's a lot more difficult to need to train people to repair 10 types of aircraft, and 2's a lot more manageable. So they're very efficient at what they do, and on top of that, because they are owned by the Panamanian government, they get a nice little subsidy when they're docked at the Tocumen International Airport, and they pay lower gate fees than a lot of their competitors do. And as a result, they have about 85-90% of all of the air traffic in and out of that airport in Panama. They also have about the same amount of gate reservations. So they basically have a significant amount of the market share because they have a persistent cost advantage when they're operating in Panama. And so obviously they have a lot of competitive strengths. And on top of that, they're very their financials look very good. In terms of debt, I mean, airlines typically have a lot of debt, but compared to other airlines, Copa's debt levels seem very reasonable. They would be able to borrow more if necessary, but they're also still profitable, which is actually surprising considering that they do a lot of business in Venezuela, Argentina, and Colombia. Those economies aren't exactly doing too hot right now. I think Venezuela has inflation well in excess of 100% right now, which is not quite what you're looking for. So it's a very tough environment to conduct business in. And they recently had basically a huge foreign exchange loss that they incurred relating to it's basically a currency repatriation issue between them and the Venezuelan government. And this, by the way, doesn't only affect Copa, it's also affecting a number of other companies that conduct business in Venezuela. But it was about a $450 million exchange loss essentially. So they wrote that off, which has gotten rid of a lot of uncertainty that surrounds the stock. And if you exclude that from their earnings, they'd still be profitable. And this is kind of a one-time expense. I don't expect nothing this large going forward. They're going to have small currency losses, I would expect, just exchange losses in the future, just because there's a lot of inflation in some of the countries they conduct business. But they've been backing out of those markets and entering new markets that are less profitable, but at least they get to keep the profit that they make. And so I think going forward they're going to continue to do very well, and they're going to struggle a little bit while these economies try to get back on their feet. But right now I feel that the stock is valued as if these countries are going to be in recession perpetually, which I don't think is the case. I don't like trying to time markets, but I think it's safe to say that at some point they're going to come out of a recession. And when they do, I think their operating margin is going to go back up to 17-18%, which is about historically where it's averaged. It's at about 9% right now, so they're only making about half as much profit as typical. And the way they're valued, it's valued as if they're going to make half as much profit as normal forever and not grow at all. And I don't think either of those are true. I think they're going to eventually go back to being the same profitable airline that they used to be. And I also think they're going to grow. One of the biggest catalysts for growth is going to be the expansion of the Tocumen International Airport in Panama. So they're adding a southern terminal there. That's under construction right now, and it'll be finished up very soon. And so as that opens up, the amount of air traffic in Panama is going to increase, and that should really help out Copa in the long run. Also, just because of where they're doing business, Central America and Latin America are two economies that are expected to grow quite a bit. I mean, they're developing economies, and you'd expect a higher than average growth rate there in the long term. And as those economies grow, there's going to be rising levels of consumer income, and as people are going to be more inclined to spend that on leisure travel. So I actually expect leisure travel and airlines in general to do a little bit better than the overall economy does in Latin America and Central America. And I think Copa is well positioned to take advantage of that. I think Copa is also the strongest airline in that region. And I also really appreciate the fact that the stock price has come down from about $160 a share to, it's at about 54, 55 right now. So that's a huge discount. And a lot of that's because of the bad economic conditions that are surrounding the company just because of the markets they conduct business in. Um, but eventually, I think those markets are going to recover, and when they do, I think the stock price will as well. So I think it's a value play. I'm willing to sit on this for a while and just wait patiently for the situation to improve. I can't really predict when it will improve, but I think eventually it will, and when it does, I think Copa's gonna benefit quite a bit from it. So here's the order. I'm basically, it's going to be a buy order with a limit set at $54.49, and we're going to be buying 367 shares. Today is Friday, June 10th, but I'm not gonna. This is hypothetical, but this order is going to be entered over the weekend, and so it will be executed sometime next week, starting probably on Monday. So Monday is June 13th, and so if the stock price is at or below $54.49, it'll buy it, and this is good till canceled. And if it doesn't go below that price, then we're just going to be sitting on cash. So this will be about a $20,000 position, a hypothetical position. And just as a reminder, I'm not offering any investment advice here. I don't recommend that anyone goes out and buys Copa Airlines. I'm not a licensed investment advisor, and I'm not responsible for any gains or losses that you incur as a result of watching this video. And one last thing, down in the comment section below, I'll be posting a link to a performance and holdings spreadsheet, something along those lines, where you can follow and track how the different hypothetical transactions that I'm making, how they perform. So that'll be down there in a few days, just down below in the comment section. And I hope you guys enjoyed that. We'll have more coming soon.